Welcome to the Stock Network's ASX Gems Critical Minerals Investment Conference. At TSN, our mission is to connect investors with fresh stock education and deliver digital investor access that empowers better investment decisions. There are many reasons why investors should currently be paying attention to a select group of minerals which are collectively classed as critical minerals. Put simply, critical minerals are the building blocks of our modern day economy, which is being powered ahead of a host of so-called new age industrial sectors. These sectors produce a wide range of in-demand goods, including electric vehicles, batteries, defence systems central to national security, semiconductors, and renewable energy infrastructure. Major North American, European, and Asian countries are now developing and implementing critical metal strategies that target security of supply for these new economy commodities. These countries' security of supply concerns have been amplified by fears that persistent trade-related tensions and geopolitics could prompt China, a dominant producer of many critical minerals, to restrict supply to other countries. Motivated by these concerns, many countries have compiled lists of the metals they see as critical to their future prosperity. Leading the pack here is the US government, which has formally designated a long list of critical minerals, including copper, rare earths, lithium, and antimony, all essential to energy security, electrification, and advanced manufacturing. Australia has its own critical minerals and strategic materials list, recognising many of the same commodities as vital to economic resilience and future industries. So why does this matter for investors? Because we're seeing demand-supply dynamics for critical minerals in a constant state of change, as electrification drives long-term demand for lithium, nickel, and graphite, as decarbonisation bolsters demand for copper, the metal that underpins everything. Increased spending on defence feeds demand spikes for rare earths and antimony, and supply shortages for critical minerals are feeding investor interest in ASX-listed resource explorers currently proving up the prospectivity of critical mineral projects on their books. And that brings us to today. You'll hear from the company's leverage to the current quest to find and develop deposits of in-demand minerals, including rare earths, tungsten, copper, battery material, and more. These are the companies at different stages, but all exposed to commodities that are increasingly strategic on a global stage. This is your time to sit back, tune in, and take notes, because investing is all about being informed, prepared, and positioned. Welcome to the Stock Network's ASX Gems Critical Minerals Spotlight. European lithium has surged on the back of a proposed merger with Nasdaq-listed Critical Metals Corp, positioning the company as a global critical minerals player across lithium and rare earths. Under the non-binding deal, European lithium shareholders would receive Critical Metals Corp shares and own around 45% of the combined entity. I'm joined today by Executive Chairman Tony Sage to explain how the transaction could accelerate growth and global relevance, also his outlook for critical minerals. Tony, welcome back to the Stock Network.
Thanks for having me.
Now, you've just announced a proposed merger with Critical Metals Corp. How does this deal really strengthen your position in the critical minerals space? And also, why do you think now is the right time to scale globally?
Look, I think it's a very important transaction for our European lithium shareholders, firstly, because the arbitration gap between the two stocks is just unbelievable. We've got $800 million worth of shares that we own in critical metals, and the value of our company is only $400 million. Plus, we've got $300 million in cash. So the value our shareholders were getting on market was below by more than half of the real value. It helps critical metals because we've got a massive mine, as you know, ready to be developed. We need funds. There's $300 million sitting in the EUR bank account. So really, it's for critical metal shareholders. It's like doing a fundraise, but you end up with all these other assets. So it's a fantastic deal for both companies. Our shareholders now in EUR, I've not had one shareholder complain about this transaction. In fact, It's been the opposite. I've had more congratulatory messages than I've ever had in my whole career. So a lot of people wanted that move. It also saves a lot of funds, obviously. Not being on the ASX saves us a lot of money. Not having the compliance here saves us a lot of money. We lose a couple of directors as a part of this as well, so it streamlines it, obviously staffing-wise. So it's a very good transaction on both sides, and very, very important for critical metals in developing Tambries.
Fantastic. You've done a great job outlining the strategy for that transaction. In terms of the strategic assets you have, as mentioned, you've got exposure to Wolfsburg in Austria, also Tambries in Greenland. How important really do you think these assets are in terms of securing supply for Western markets?
Look, it's extremely important. I think I've banged on about this for a long, long time. I mean, I'm just going to talk about four of the heavies: terbium, niobium, gallium, and hafnium. Very, very important for the nuclear industry. In the case of hafnium, over 70 reactors. A lot of people don't know they're being commissioned over the next 15 years to be built. Hafnium is a very, very, very important part of that. And a lot of people don't realise, because no one talks about hafnium, China controls 98% of the flow of hafnium. They're building 40 reactors themselves over the next 20 or 30 years. They need all that hafnium. They're not going to export. So that's just one mineral. Very, very important. The other ones, terbium, gallium, niobium, very important in the defence industries. For example, the US is going to be, within 18 months, run out of gallium. So having Tambries, I'll digress a little bit. There's some of the competitors out there, MP Materials, Lynas, they're producing lights. That's fantastic. They're going to make a lot of money doing that. But they're not producing these four particular minerals in enough quantity to satisfy the demand from the United States, EU, NATO, for the defence industry. So terbium, niobium, gallium are those three. So Tambries, opening up Tambries, we estimate under full production we'll control about 50% of the market on those three minerals ourselves, right? So that reduces the reliance on China. So it is very, very important. On the other side, lithium with Wolfsburg, very, very important. That's ready to mine. We're ready to push the button. The reason we haven't done in the last 2 years is because of the lithium price, but lithium is steadily rising. And I think that's going to get a lot more upside, mainly on the robotic side, funny enough. But this oil crisis also has increased demand for EVs. It's gone up 20% in Europe. It's unbelievable. So you'll see a tick up in lithium. So supplying the lithium out of Europe is going to also reduce the need for Chinese input.
Absolutely. And Tony, I'm keen to get your outlook for the next perhaps 3 to 5 years. As you mentioned, demand for lithium and rare earths is accelerating now. But in terms of looking ahead, where do you see the biggest supply gaps emerging?
Look, at the moment, in particular minerals, the supply gaps are the defence industry ones, the terbiums, the niobiums, the galliums. And I can't see that being fixed, not even with Tambries. I mean, even now with this input of cash, we don't have to go to the markets now in critical. We're not going to be able to export for another 3 years. And the problem after that is not only the mining, is the processing. So really there's only Lynas, MP Materials. There's a couple of smaller companies now emerging in the US, Realloys, Ucore, who some of our products going to. But the processing of these rare earths is going to be the bottleneck. We envisage that our processing plant, we're building one in Europe, one in Saudi, and we're exporting to 2 in the US. So we expect them to be in line in about 3.5 years. So we can find it, we can actually mine the material, but getting it processed into the salts, into the metals is going to be the bottleneck. And I see that shortage lasting at least another 3 or 4 years.
Certainly very interesting times ahead for critical minerals, and appreciate the update from European Lithium today and being part of our Critical Minerals Conference.
No problems. Thanks very much for having me.
Good morning, everyone. My name is Ron Mitchell, the CEO at Firebird Metals Limited, and great to be here talking about a company that's developed a world first and is going to be deploying world first technology in the battery materials industry. So, just by way of background, Firebird Metals, listed company, we came to market in 2021 on the back of a JORC compliant manganese resource in Western Australia. The company over the last 3 years has put a sole focus in demonstrating advanced manganese-based lithium-ion battery materials. We've successfully demonstrated this technology through a pilot plant in China. Our next step now is to deploy this technology in the West. So our focus, quite simply, is on manganese-rich battery chemistries. Manganese is cheap, it's abundant, it's stable and safe, and it's sourced from politically stable jurisdictions. And that's why a lot of the car makers are particularly interested in this technology. We have executed an exclusive license agreement between our Chinese pilot plant, our subsidiary in China, and our Australian parent. And we're looking to now bring this technology down, demonstrate it here in Australia through an advanced demonstration facility, and then look to commercialise the technology with a partner. It is disruptive. As I mentioned earlier, the focus on manganese is purely around the cost and performance benefits that it brings. It will be displacing a significant portion of the nickel and the cobalt, which is currently used in the high-end batteries. And of course, for LFP adoption, the manganese component increases the energy density at a lower cost per kilowatt basis. The company is 100% vertically integrated. As I mentioned earlier, we do own our own resource in Western Australia, sitting on a granted mining lease, 176 million tonne resource, sitting at around 10% MN. Importantly for us, it gives us great flexibility going forward. If that market does tighten, we've got the opportunity to bring that asset to market. We do have a world-class technical team. Again, we've had a toe in China developing this technology with Chinese expertise. We've got 7 engineers working at our pilot facility. So we're not a company that's trying to develop this technology independently of China. We've developed together with China. Our team's got a lot of manganese experience specifically, and across the battery materials markets and resources sector, we really believe we're peerless in that regard. And as I mentioned earlier, the focus is really on cost. We are positioned firmly on the first quartile of the cost curve. And that's really where you need to be in any market, in any industry, particularly in the resources and technology, going to be successful in the long term. So let's talk about what's happening in the market. The focus historically has been LFP battery technology for both electrification and energy storage. And that's really based on cost. But what we're seeing now is the emergence of the LMFP. So it's effectively an LFP cell doped with a high purity manganese sulfate. This company has developed this technology independently. And the future is this LMR. So it's basically an LMR cell is displacing, as I mentioned, the high nickel component of a traditional NCM battery with high levels of manganese, up to 50% manganese. So LMFP battery, simply, it's about energy density. We get an uplift to up to 20% increased energy density. And what that means in practical terms is longer range for a vehicle. We're seeing vehicles now deployed of up to 1,000 kilometres or more. And the higher operating voltage certainly allows a faster recharge as well. So this concept of recharge anxiety is really a thing of the past now. And it delivers a cheaper cell on a cost per kilowatt basis, which is what the car makers, and particularly the Western car makers, are really focused on. We've seen some examples of advanced lithium manganese deployed in the market. These are very recent. In February, FAW, a Chinese OEM brand, announced a lithium manganese semi-solid battery technology that promises greater than 1,000 kilometre range. We've heard from some of the car makers, including GM, Ford, and Tesla, looking at these types of technologies going forward. And a range of the battery players as well are also pursuing advanced manganese battery chemistries. Most recently, the BYD Blade 2 announced a vehicle, a battery cell, the Blade 2, which is going to be deployed across 10 models in the back half of this year. And we firmly believe this is based on an LMFP cell, given the performance and also the energy density, and most importantly, the operating voltage. So some of the metrics here are just truly remarkable. Bringing a battery from a 10% charge position to close to 100% in less than 10 minutes. That's game changing. And if you look at the range there exceeding 1,000 kilometres, again, all of these historic concerns around electrification, around range anxiety and battery recharge anxiety are really very much a thing of the past. We are seeing a lot of R&D development. A lot of the R&D is highly secretive, as you can imagine, because the prize is a big one. We've seen here a lot of the major Chinese battery companies are pursuing either a combination of LMFP or LMR, and certainly the Korean and Japanese battery giants are similarly looking at this technology. And then the car makers, Tesla, PowerCo, which is a subsidiary of Volkswagen, have announced development in this space. So the forecast is significant. We are seeing, particularly with what is playing out globally at the moment, in the macro, quite a significant and strong shift towards electrification, and not just for e-mobility, but also in energy storage. The technology now is modularized. It's cost effective. A lot of the issues with thermal runaway have now been resolved through advanced battery management systems, and we're seeing costs come down on a significant scale. So battery energy storage, the BESS market is one that is absolutely flying. We expect this is going to augment in terms of very significant increased lithium demand, which is a proxy for the battery sector, proxy metal for the battery sector. And certainly we expect increased adoption of manganese going forward, given the uplift in energy density and the lower cost. So on a value basis, we have a very firm view that manganese adoption in the combination of battery chemistries is going to lift quite significantly over the next 10 years. And really, if I look at manganese, it's kind of positioned where lithium was, 15, 16 years ago. It was mainly an industrial mineral with about a 5 to 6% usage in the rechargeable battery sector. But fast forward, 10 years, the expectation is that we're going to see very significant increased penetration of manganese molecules in the rechargeable battery industry. So how does Firebird Metals fit into this landscape? Well, we've developed a next generation technology. As I mentioned, we've developed in China, and we're now looking to bring it to the West. We are vertically integrated in the sense that we're the only company in the world that's able to process manganese ore by way of a concentrate to produce low-cost input materials, including the high-purity manganese sulfate monohydrate, and then ultimately the cathode active materials based on these manganese inputs. We have quite a significant competitive advantage. We've been at this for quite some time. We've been running a pilot plant in China for the best part of 3.5 years now. We have sector-leading expertise that's been sourced from CSU. It's a major technical university in China. We've also sourced staff that have worked for large cathode production facilities within China as well, and they're 100% on our payroll. And very heavily incentivized, both in the short term and long term. We understand the importance around patent protection and intellectual property. We have filed 6 patents. They are locked down under our Chinese subsidiary, which is 100% controlled by our parent. And we've just recently executed a license agreement to transfer those patents and the intellectual property to our Australian demonstration plant. This next slide just shows the process flow. Again, I talked about the focus. We're on the lowest quartile of the cost curve, and we do that through various ways. Historically, most battery materials, battery chemicals are processed into a monohydrate form, a solid form that accomplishes 2 things. The crystallization step removes impurities, but it also produces a material that's transportable. It's in a solid form by bulk bag. What we do in this process, first and foremost, to keep costs down, is we have a significant energy-saving electric calcination patented kiln that converts the manganese into a acid leachable form. We use sulfuric to produce a manganese sulfate. Instead of crystallizing that material, we keep it in solution. That results in a significant energy saving. And then we co-precipitate to produce a combination of downstream precursor cathode active materials, and then ultimately the cathode active materials. The photos here are from our pilot plant in China, which, as I mentioned, has been operating since 2023. The next slide here just shows you the work completed to date. You know, this incredible technology hasn't developed overnight. The team's been hard at it for many years. We've executed a number of research programs, development programs, producing multiple samples to our Chinese customers. And the next focus for now is to bring this tech into a Western setting. And this is where our Australian demonstration plant comes into play. As I mentioned, it is a world first. There's no other company doing this. There's only a handful of companies outside of China that are able to produce a high purity manganese sulfate. Not only do we have the capability to produce a manganese sulfate, but we can go all the way through to PCAM and CAM. So that's really important in terms of our commercialization strategy, because we're able to engage and potentially partner with multiple segments within the value chain. The project's de-risked. There's very strong government interest in what we're doing, and we'll read more about that in due course. Certainly, they're very supportive of what we're doing, and there is a number of grants available, dollar for dollar type grants available to support our project, and we're very confident we'll be able to source those in the coming months. We have significant expertise across the flow sheet and the operation of this equipment. We will be bringing our engineers down from China during the commissioning program of our Australian demonstration plant. It is flexible and ore agnostic, so we're able to go to market and source manganese ore on the market. It's cheap and abundant, and that's the beauty of manganese. So, you know, our process has proven we're able to process multiple ores from multiple jurisdictions, and this Australian demonstration plant will also verify that in a single circuit. We expect the ADP to become a knowledge centre. We expect strong interest from other battery companies to process other battery materials through this facility. And certainly the ADP is the last step in terms of our commercialisation pathway, because at the end of this process, you know, we'll be looking to partner with a company and take this technology into a commercial setting. This is may look like a busy slide, but importantly, this is the flow sheet of our Australian demonstration plant, and there's a front end, the pyrometallurgical part of the plant, which converts the manganese into a high purity manganese sulfate. We have expertise through the entire part of that process, which is very important, and we've got patented equipment within the process as well. We have the ability to crystallise material, and there are customers, car makers that are very interested in sourcing the high purity manganese sulfate by way of the crystal. So we will be providing that material, but we will also be keeping the material in solution to produce both a combination of precursor cathode active materials, manganese based, and CAM materials as well. So just summing up, this is really the year ahead for us, busy year. The license agreement is executed. That's really important around ownership and commercialisation pathway. The site selection is in the final stages. We're expecting to announce that in the coming weeks. The equipment order will kick off in the next handful of weeks. Delivery is around a 3-month delivery window. All the gear will be sourced from China for obvious reasons. Gives us time to ready the site. We are partnered with a number of engineering firms to assist us in terms of the site readiness. Commissioning is earmarked for Q3 this year, and then we'll be in a production phase for the next sort of 12 to 18 months. And part of that production phase is providing samples to global car makers, but also battery giants as well. There'll be strong interest in the asset. We, as I said, will be located in the Perth metropolitan area, within 10 kilometres of the CBD, so great access for government officials, but also, you know, industry and investors and other stakeholders. We've got a strong team. As I mentioned, you know, more than 50 years of manganese experience, 100 years of battery materials experience, and 200 years of cumulative resources experience across the team. So we're really well positioned. Clearly, once we deploy the ADP, we'll be looking to develop technical capability within the team as well going forward. Corporate snapshot, really undervalued at the moment. It's a tight share register, 182 million shares on issue. But certainly this year, as we move forward and execute on a number of these milestones, we're expecting strong upward appreciation in terms of the equity value of the company. So finishing off, sustainability is important, but it's really around cost performance. This is an image of our electric calcination kiln. It's an 11-metre kiln developed in China. We will be deploying this at commercial scale as part of our process as well. This kiln results in about a 70% energy saving compared to traditional gas-fired calcination. So just summing up, we're focused on manganese-rich battery tech, which is the next evolution of battery technology. It's really focused on the cost curve and lifting performance. Margin capture is really important. We feel we deliver that certainly, and we're competitive even against our Chinese peers because we have a fully integrated flow sheet. Our technology is proprietary, so we are a technology company, and it's important that we have executed this exclusive license agreement, and our technology is globally scalable, which is a really, really important consideration for our commercialization pathway. So thanks very much for your time, and certainly happy to take any questions after this particular round.
For joining me, and I'm very excited to be presenting Arena Rare Earths PLC. My name is Ivan Murphy, and I am the executive chairman of our company. I'm going to give you a whistle-stop tour of some of our slides here, which are also available on our website, arenaresources.com. Arena Resources, and Arena Rare Earths rather, is the only ionic clay listed rare earth company on the London Stock Exchange. We're listed on the main board of the London Stock Exchange, and we have what is now recognized as one of the largest proven ionic clay rare earth deposits outside of China. This is important because ionic clay projects are much easier to process, much easier to deliver a concentrate with. And in our case, we are very mineralized, predominantly mineralized in heavy rare earths, which I'll talk about in a few moments. So we have 600,000 tons of JORC resource from SGS. We have a pre-feasibility study already published to the market. We're in a process which we've been discussing and being open about with the market, with the US government through their Development Finance Corporation for an inward investment. And we're really excited about updating the market on that shortly. And we are just now upgrading permitting in country to our exploitation license. We have a brilliant investor base, shareholder base already, Wexford Capital out of Connecticut. We've got a large US-based family office specializing in natural resources. RAB Capital, one of the longest standing mineral and natural resources investors in London. And the very well known Greg Coffey, the Australian, who I'm sure lots of you on this watching this will be familiar with. So we're delighted to have that group. It means we're really well resourced for ongoing funding and very supportive shareholders who believe in us taking this project out and up the development cycle and into production over the next 24 months. Where are we? We're in Madagascar. So our project is up on the very north coast, which is a brilliant location for mining. As many of you will know, logistics are always an issue in Africa. And if you're landlocked and need railway lines, etc., it can be very challenging to get your infrastructure, to get your product to port. We don't have that problem, about 50-60K down to the port, and that will get a road upgrade as part of our development. We own our project 100% at the moment, which is great. We are not an exploration project. We have our resource. We're not really a mining project because we're not blowing up stuff and we're not crushing rocks. This is a heap leach, not an in situ leach. It's really important to make the distinction between the two. A heap leach. And as you can see from an AI generated photograph, this is what it's going to look like. So we have huge heap pads, and we bring our clay to those. We treat them. I'll talk about that a little more in a minute. And then we remediate that soil by bringing it back to where we got it from. And as we're using an ammonia sulfate and saltwater combination for our washes and treatments, we get a very rapid remediation. And also, obviously, with Mother Nature there being the jungle, remediation is very quick. So we're very low environmentally, and that is something that's also really, really exciting about our project. Here's a little snapshot of our kind of market position. We're listed in London. We have an OTC listing in the US, just at the very first step of the US capital markets. Our share price around 3.3 at the moment. I don't know exactly what it is today. We have 4p here. That was when I guess we did this slide. So our market cap is, £25 or 22, £25 at the moment, so about 50 Aussie dollars. We're just incredibly undervalued. I'm going to talk about that in a second. And we expect that to change in the near future as we move through these next announcements and just really crack out into the later stage development bracket. It's been a great 6 or 9 months for this company to come right up the development curve. Here's a quote from SGS. I've been in this business a long time. There's a very, very specific quote which just shows the scale of what we've got and the independent verification of the size of our resource. I'm not going to dwell on this too much. This is our team. As I say, our presentation is available online. I'll just talk about probably one person here specifically, Alan Mulligan, our Executive Technical Director, who's just been phenomenal and one of the people who has a real understanding, particularly of ionic clay rare earth projects. He's also brought projects previously from exploration to development to commissioning. So he's done the whole cycle. So we're not explorers, but really moving into development and now production over these next 24 months. So we're excited about that. We have a great and very supportive board, including Tim Morrison, who may be known to some in Australia, who's involved in another and quite a few actually other listed companies over the years and currently. Here are some unashamed self-promotion photos of myself in very important places, but it's really key to explain what this is about. We started an engagement process with the US government probably September last year, and that's really starting to come to fruition. The US government are the most forward sovereign globally who are really getting a handle on this critical mineral problem. You cannot build an army, you cannot build defense, you cannot build AI, you cannot build robotics without control over critical minerals, especially heavy rare earths. And they've really got the bit between the teeth and really advanced in their strategy to have security over those minerals outside of China, who absolutely dominate this space. On the right-hand side, a recent visit to Madagascar with the relatively recently appointed mining minister from Q4 last year. And we are working really closely with them and are very excited to update the market soon on our permit, our next stage of permitting, I should say. If you don't know the strategic importance of critical minerals and rare earths to the US, you're not reading the news, reading the newspapers or in touch with much. But I can recap it. The Chinese control this area, particularly in heavy rare earths, about 95% of global production. That is not working, not just for the US, but for any other Western economy who needs mineral security, and it's a huge issue. This is not an administration specific issue. The next administration in the US and in any other country will continue down this mineral security line. We don't really have a choice, and this is pretty much a bipartisan issue. So we're pretty pleased with that. This is just an example of other mining projects that have had inward investment from US government agencies. A couple of the flagship ones are MP Materials. I was actually in the US yesterday, and while we were looking at something, we drove past MP Materials, an incredible operation they've got there in the US. Along with Linus, they're the kind of leader in actually producing, developing, refining and delivering rare earths, which is awesome. Now they've got a specific deal with the Department of War now in the US, a huge investment from them, and a base price, floor price having been set by the government. So we've seen this floor price happen more and more, and we're also seeing a lot of M&A in the sector. We've seen USA Rare Earths make a huge purchase over in Brazil, just more and more M&A, which is not surprising to us. So we're right in the same space as these guys, getting an inward investment to move our development towards production, working with US government agencies. We're right in that space, but you'll see it's not yet reflected in our valuation, which I'll talk about later. We've published our PFS, or a summary of our very detailed PFS, which is also available on our website through our regulated news service through the London Stock Exchange. So we've announced these. Two different price points here, or MPV points, 350 odd million and about 600 odd million. Why is the difference? The difference is really simple. The pricing in rare earths is really hard to get good solid pricing on. So this top band is using sort of analyst source long-term pricing. And by pricing, I mean long-term. And then below is a much deeper sort of AI scrape. We just had a call yesterday with Benchmark, one of the world's leaders in metal pricing and commodity pricing. And we're probably going to work with them to start to develop a much better idea of what pricing is, because there's reported 5 and 8x price increases over China prices. So ex-China prices can be sometimes 5 and 10 times as higher than actual China prices. So a lot of stuff going on in the market. So we're just trying to build a better understanding of what the longer term value and what our real NPVs are, which I suspect will be significantly higher than this, given the way pricing has gone for rare earths, especially ex-China rare earths. Here are some highlights. I won't go through them all in detail, but we do have a predominantly and will be delivering a very high value concentrate with this very high percentage of rare earths, but specifically heavy rare earths. And this is something we get asked a lot about because we have a low grade. It's not so much about grading in rare earths. If you have a super high grade, but you're a couple of miles under the ice cap, well, you've got a whole other set of issues, right? So we have clay on the surface over the first 10 meters of surface in clay. Literally, it's as soft as that. I'll show you some photos in a moment, which means our ability to get to production is much quicker. Our processing is so much easier. And in the end, for us, we end up moving and processing a huge amount of clay, but ending up with a really high value super high concentrate, so bent towards heavy rare earths. So very excited about that. And logistically, because of where we are, we have fewer challenges than other projects of this type, given our proximity to really good ports, which I'll talk about in a second. The kind of investment overview. We've kind of got it all, I'd have to say. And, I wake up at night sometimes and I think, what are we missing? And I just don't think we're missing anything. We've got a brilliant resource, which is proven. We've got a great relationship in country, which we're moving through to our exploitation permit with. We've inward investment close to completion with the US government, which we've been open about through the DFC, which is probably the kind of flagship investment fund now within the US government structures. And that, of course, opens us up to lots of opportunities for financing our full development needs, which is about 140, 150 million later on. We're ionic clay, which means we can remediate easily and efficiently in a very environmentally friendly way. And we are hitting this market probably quite long before some projects, some larger projects, which are going to take a bit longer to get to market. We're very comfortable that we'll be able to deliver concentrate within 24 months, which is really short in mining terms, as many of you will know who are watching this. Here's a recap on our timeline. As you can see, we're into 2026 now. We're obviously comfortable that we're going to, be in and around all these things completed this year. Go backwards, which is the pilot plant, the on-site lab, a DFS, mining license, and we don't have in here our inward investment from the US, but that is also part of that. So big year for us to kind of take what was laboratory test work, which has been the basis of how we've developed our PFS, to just doing more on-site treatment and starting to produce a small bit of concentrate on-site on mini heap pads, just to show that we've got proof of concept locally to build out from, and then to do that in obviously massive scale into 2027 for a delivery of a concentrate in Q1 2028. Again, just another little bit on the project, which just highlights the proximity to ports, which is obviously incredibly important for logistics with mining projects. Also, this is rare earth, so we end up with a small amount of product, not like iron ore or bulk commodities, which have much, much bigger logistical issues than we do. We're only going to be shipping about 4,000 tons a year of our concentrate, which is relatively small, given bulk commodity scale. Here's a nice, simple sort of cartoon effect here of how this processing works. As you can see, it's quite circular, and we just keep doing rinse and repeat, literally in this case, excuse the pun, but we are doing that. We're rinsing and rinsing and rinsing and putting our clay through various processes so that we can then end up with this concentrate that's ready for shipping. We are not refining rare earths here. We are not going to be delivering rare earths. We will be shipping feedstock concentrate and putting that into the US critical minerals cycle, which is dying for it, and we're excited to be part of that. Here's a slide. I mean, our valuation's a little higher than it was when we did this, but still, as you can see, chronically undervalued. There's no argument to that. We're really excited to see that change significantly in these coming months, especially around the next stages for us around announcements and just how much hotter the sector has become. We've seen a lot of M&A. We've seen a lot of projects get a lot more focus as they've moved along. So we're excited to be part of that group. I'll only touch on this for a second because I probably don't talk about it enough. Everybody knows about the explosion in EVs. Everybody knows about the explosion in, or the huge increase in defense spending, which is not going to stop, obviously, given current situations, which are huge consumers of rare earths, needless to say, mobile phones and other usages. However, robotics is going to be this massive growth area and a huge amount. You can see just an exponential increase in what's going to be needed of heavy rare earths, the type of which we have concentrate for as the robotics industry explodes. Not just our at-home robot making us tea, which I'm very much looking forward to, obviously, but really it's about robots for defense, it's about robots in manufacturing, and it's about robots doing much, much more than just that. So I think it's going to be a sea change, and what an exciting time to be alive, as they say. Here's a split down, a little more detail on our JORC, which you can take the time to look at. As I say, it's on our website. We're doing some more work on that in the concentrate sense. So we're going to, produce a couple more kilos of concentrate with a lab in Africa that we're sending some bulk samples down to, and we'll be really looking forward to updating the market on those. Here's some photos from our site. This gives you an idea. One of our crew here on the right-hand side, just standing at a cut, which shows you the mineralized zone, which, as you can see, is effectively, as I've described, clay. These pits along the bottom, so we dug 4,260 pits, about 1 meter square and up to 10 meters deep. And it was from those that we took these many, many samples that we built this resource from. Most of those have now obviously been remediated and refilled, and are no longer open. I touched earlier on our board. We've just made Jack, our interim CFO, our CFO, so that was big help to us. We expect to make further announcements shortly on the geological side, but much more so in country. We have a whole crew in country that we're now adding to. We've just had a crew of about 100 locals working on some road clearance as we start to develop further on site, which is really exciting, as we're pushing way through beyond the exploration phase and into development. You get to do a lot of stuff now, really great stuff on the ground, lots of employment, lots of social engagement for us. We consider this a fundamental part of our success. We can't be successful here without proper social engagement locally, which is very much our focus. And we're all local employees, locally, including consultants around environmental, including consultants on lots of other things. We use all of that in country, which we're very lucky to have that available to us. So that's Arena Rare Earths PLC, listed in London, also listed on the OTC in New York, the only ionic clay project listed in the London Stock Exchange. Not exploration, development, moving towards production, and certainly evaluation that's catching up with the others. And we're really excited about these next couple of quarters as we get into the end of this year. So thank you so much for taking the time to watch and listen to me present our company, which we're really proud of.
Hello and welcome everyone to the Stock Network. I am Dr. Mike Jones, Managing Director of Impact Minerals, listed on the ASX under code IPT. And I'm here to talk to you today about how Impact is now building an industrial minerals powerhouse out of the salt lakes of Western Australia. And I'm sure that most of you have driven over these lakes, whether it's in WA or around Australia. And they're incredible living laboratories, and every one of them, as it turns out, has a different sort of chemistry and background to it. They're actually already sources of salt, dolomite, and of groundwater potash that's been attempted over the years. And we are in the process of building this powerhouse out of high purity alumina and fertilizer potash, and also hydrochloric acid. And so it's an amazing thing. And here we are at Lake Hope. So this is where our high purity alumina is sitting. And following on from our pre-feasibility study last year from our ore reserve, we have about $15 billion worth of high purity alumina in the top 2 meters of that salt lake. And we've now discovered another method of making potash and hydrochloric acid out of the same clays. It's an amazing deposit, and the idea is very simply, we're going to dig that material up and truck it into Perth. And in Perth, we have access to and a 50% shareholder in a technology to produce high purity alumina through a company called Illuminous. It contains a world-breaking, groundbreaking technology to produce high purity alumina from solvent extraction technology. It's currently using a chemical feedstock, but we believe that we can integrate the Lake Hope material into that. And it's a combination of those two things, the lake and this unique technology, that we believe is going to allow us to become the lowest cost producer of high purity alumina globally. And on the back of that, also developed our potash and hydrochloric acid project. What is high purity alumina? It's used in a wide range of high-tech industries, light emitting diodes, artificial sapphire, advanced ceramics, but in particular we're seeing growth markets in the semiconductor industry, where it's used to help cool the semiconductors, and also it's helped used to polish the particles, the silicon carbide, gallium arsenide that go into modern semiconductors. It's a very highly skilled process and requires ultra-fine high purity alumina to do so. It's also being incredibly well used in the battery market, in particular lithium ion storage batteries. We believe that North America is a big growth market for there, and we've already started to establish a foothold there. And also an emerging market for direct lithium extraction, where high purity alumina and precursors to it are used for lithium extraction out of brines. So what we're seeing at the moment is a market that's growing at about 15% per annum, and we're approaching a tightening of supply in the next couple of years. This graph is showing that demand in the different industries, and so we believe that it's going to be a high margin business that's forecast to grow the whole industry to about $20 billion by 2035. And so we believe that we're going to be able to revolutionize HPA production to become a dominant global supplier by as soon as 2030. And we're going to do that because we will be one of, if not the lowest cost supplier of HPA. We've got an amazing ability with the Luminous technology to build low cost, small modular plants to allow rapid global commercialization. And we're going to demonstrate that very shortly by being able to scale production from our pilot plant, which is here in North Perth in Western Australia, up to our first commercial plant of at least a few hundred tons of production, if not 1,000 tons of production. We've also got a government-funded research project into membrane technology. Membrane technology widely used in the water treatment industry and is being brought into the mining industry by Edith Cowan University, and we have a fantastic research project with them, which is already leading to new patents. So high purity alumina, it's all about how pure it is. Depends on which will control the revenue, and we're looking to focus here on that 4N and 3N space. Which is the bulk of the market. We will be able to produce 5N ultra pure material. There's not a lot of volume there, but it's certainly where the cream on the top is. So this is the results of our pre-feasibility study shown here on a cost curve analysis. We have current producers, Southeast Asia and Europe, very high costs. China has low cost material. We believe that we could be competitive with them and other players in the Australian marketplace, AEM and Alpha HPA. And so we've jumped into the future here, and this is where our operating cost is. It's going to be less than $5,000 a ton. This is one of the reasons that it is going to be cheap to mine. It's very easy to drill out. And the idea is very simply, doesn't need any on-site beneficiation. We're going to dig the material up and transport it to our plant in Perth. But along the way then, we have discovered another method to make potash and hydrochloric acid. This will be more of a conventional mining project. It'll probably be located near salmon gums. We've already put out an exploration target for 2 small lakes there containing 1.5 million tonnes of potash. We believe that we're on the verge of a major discovery there. We've got our guys out in the field at the moment trying to accelerate that discovery, and we believe that it's a fantastic place at Salmon Gums to have a mine that will provide fertiliser into the wheat belt and also hydrochloric acid and possibly even waste material as cement up into the goldfields in Norseman and Kalgoorlie. Very exciting development there that you should keep your eye on. So look, getting into high purity minerals is a challenge in itself. I won't dwell on these today, but there are a number of barriers that you need to get over. Purity, feedstock and reagents, I won't dwell on those today, but it's very important to have your own operating facility as quickly as you can to accelerate your client engagement. And also financing scale up is always a challenge in industrial minerals. But if you can get over these barriers, you do have a moat. Feedstocks and reagents, as I mentioned, we're looking at trying to integrate the material in the lake into the aluminous process. That's a work in progress. But this is where we've really made strides in the pilot plant that we acquired out of administration last year. We've got an analytical laboratory. We've got this thing running now in in batch mode, and we're looking to get it into continuous mode within the next few months. We're now one of the few companies anywhere to be able to make high purity alumina almost at will, certainly in kilogram scale. And we believe now that there's been a significant technical breakthrough where we can increase the throughput in the pilot plant to turn that thing into a demonstration plant with 10 times the original production capability. That's a hugely exciting development. We'll have more news on that once we've got various test work going through. So that's allowed us to accelerate our entry into the marketplace. We have a strategic collaboration agreement with a battery technology company in North America, research institute. They're undertaking all of the test work required for us to get into the North American battery market. And we should have some results back from that within the next month or two. We'll liaise with them to get our material right and basically pre-qualify to enter into the battery market. But the big thing about that whole technology that we have in our shed here in North Perth is that we believe it's modular. We believe that we can build numerous small plants around the world without significant finance, allowing us to scale up without having to take on hundreds of millions of dollars of debt. As we roll that strategy out, it'll become obvious to people that we really have our hands on something special here in a combination of the two projects. If we compare ourselves to the two other groups on the ASX, Advanced Energy Materials, AEM, they're actually in production at the moment, small but have the ability to expand. Alpha is building a very large plant of 10,000 tonnes per annum capacity. We'll be online sort of progressively between 2027 and 2031. We've only been going a few years by comparison. We believe we're going to have a few hundred tonnes of capacity by the end of this year, one of the lowest cost producers. And currently we're probably 1/10 to 1/20th of the value in terms of market capitalisation compared to either of those two companies. That's where the value lies. So from here, look, 2025 was all about getting the plant, turning it on, getting it working. We've done that in batch mode. This year we'll demonstrate that we can get it going in continuous mode, scale up our production capability. That's really going to allow us to accelerate qualification and offtake discussions with customers. We believe that North America is the place to build our first commercial plant, and we'll be doing feasibility studies on that throughout 2026. And maybe even in a position to start building something of significance as early as next year. Fantastic outcome for us. So share price at the moment sitting around about 5 cents. We've just done a capital raise, so we are well funded for the next stage of work. Definitely worth looking at getting us on your watch list. So I'd invite you to come on our journey into high purity alumina. We aim to be one of the lowest cost producers globally, and that's because we have this unique deposit in tier 1 jurisdiction of Western Australia. We have our industry disruptive metallurgical process. We're now rapidly building out our capabilities in metallurgy and the final product specification. That's key to everything in terms of the offtake agreements. And we hope we're going to get our timing right with this tightening of supply over the next couple of years. And we're going to be able to deliver significant volumes into a high margin growth market, with significant upside potential. If you have any questions, please get in touch with me at Impact Minerals Limited. And thanks for your time today, and we'll speak again soon.
Morning all. It's a pleasure to present Tennant Minerals and the Bluebird project to those listening today. Tennant Minerals is an ASX listed group with tenements in the Northern Territory. We have two tenements that we refer to as Bluebird and Babbler, and we have our special project, which is the Bluebird discovery that we have made in the last few years, and we've been working on, and I've been working on personally for the last 3 years, an exciting high-grade copper-gold bismuth discovery in the re-emerging Tennant Creek mineral field in the Northern Territory. I think the market is well aware of the importance of copper as a special metal in the global industry and also the energy transition. The project is heavily endowed with gold and bismuth as well. So both these minerals are having a value resurgence that everyone is well aware of, and they are critical to the global financial system, industry, and of course the energy transition. So very, very important minerals. This is truly a world-class location. The Tennant Creek mineral field has been exploited for more than a century and produced some very high-grade mine production over the years. In total, the district has produced nearly 25 million tonnes of ore at nearly 7 grams per tonne gold for over 5 million ounces of gold and 2.8% copper for nearly 700,000 tonnes of copper. And the district is undergoing something of a resurgence at the moment. There is a new gold mine in the area, and there are several companies looking to develop their copper gold bismuth projects in the near term, and I'll touch on that in a minute. So our projects are located on the right-hand side of that map there. We're at the eastern edge of the Tennant Creek mineral field, which is the surface expression of an important geological formation known as the Warramunga Formation. So Bluebird has been discovered just under the cover that you can see in the yellow there coming from the right of the diagram. So Bluebird was a blind discovery. It is located about 70 meters below the surface, so not too deep. It's been the development has been heavy. The development of the understanding and the modelling has been reliant on a lot of geophysics, which is a very useful technique in the region for discovering projects such as Bluebird, and we've drilled it substantially with a lot of diamond drilling and RC drilling. So this is a zoom in of the Bluebird, what we call the Bluebird discovery. So the large red features are our geophysics models. Now this is a model of the gravity, and gravity shows density, and these are iron hosted deposits. So the deposits themselves are very dense. Now the yellow shape that you can see in the middle of that cluster of drilling is the ore zone, and you can see it sits clearly on and correlates highly with the gravity model in that area. And you can see we've had some fabulous drilling results over time, including nearly 60 meters at 2.3% copper and 80 meters at 2.7% copper and 11.1 grams per tonne gold. And the highest grade gold intercept we've had in this area is nearly 400 grams. So very high grade, compact. And the discovery is being guided, and the future extensions are being guided by the gravity modelling that you can see on the screen. So this is a cross section through the middle of the ore body that we were just showing. You can see subvertical in nature, a fantastic true width, sometimes, or horizontal width, sometimes up to 30 meters across. And once again, you can see some of the fantastic grades there. Now, the ironstone, which is typically how you find these deposits, was not exposed at the surface. So we call it a blind discovery, as I've discussed. But the high iron magnetite content and the density, as I discussed, make geophysics very, very useful in the definition of and discovery of these deposits. And you can see a little inset picture there from a photomicrograph of gold grains. Now the gold is concentrated on the hanging wall or the upper side of the deposit as it sits there in 3D, and you can see that it's very coarse grained. So visible gold is quite common, and I'll touch on how that impacts the recovery in a few moments. So thick, high grade, amenable geometry for mining, not too deep, a low weathering profile, so not a great deal of the deposit is weathered. So it's a consistent material type when it comes to mining. Here we go back again to the plan view showing the gravity model, and those blocks that you can see are the resource block model that we presented to our investors in October last year. So very good grades, moderate in size, nearly 1.6 million tonnes at what we call 3% copper equivalent. So great copper grades of 1.3%, gold grades of just over a gram, some silver in there, and some very good bismuth credits likely there as well. And we've reported this resource down to a depth below surface of only 180 meters. So we're working on what we think we will call an underground resource, which has got some drilling in it below this model and below the recorded resource, which I can explain in a few moments. So this is a side-on view of the resource. So we're looking towards the north, and you can see the topo surface there to indicate the depth to cover. Now the red model in the background is the gravity model I was talking about. And once again, you can see the high correlation with the mineralization and the gravity model. The white dots are the drilling that we've completed to date, and the pixely resource model shows the resources that we've reported down, again, as I mentioned, to the 180 meters below surface line. You can see it's a horizontal line there. And you can see that drilling exists below that, including some high-grade drilling. And we've recently completed a new hole in this area. So I'll explain that in a moment. And as you can see, with depth, and to the left, which is the west of the deposit, what we call down plunge, also has significant potential, and we'll speak about that in a minute. Now, these are the two cross sections through the geological model with the resource blocks shown. Once again, you can see the substantial width and the high grades, and you can see that below that we can see where the resource models have been flipped there, and we're working on what we think will be the underground resource, which could be presented in the future. Now, on this slide, you can see the greater area. You can also see the resource model and the drilling that we've done, and you can see the gravity model, which we think holds the potential extension of Bluebird. And we've recently, in that black label in the middle there, you can see we've recently completed drill hole BDD 050, which had nearly 20 meters of very intense mineralization. I'll show a photo of that in a moment. We're expecting results from that any minute, and I think by the time this presentation is, we will have results for that hole, and they'll be available in the market. You can see the green stars in the center of the image there. Those are our next drill targets, and we've recently applied for a co-funding project, a generous offering of co-funding that comes from the Northern Territory government. So we hope to hear about that in the next few weeks. It's a collaboration grant where we will drill 3 diamond drill holes if successful, and we will collaborate with the Northern Territory on that data, and that's a very positive initiative from the local government. Now, what does it mean if we have? What does our discovery mean? So in 2024 we conducted a number of metallurgical recovery test work programs, and we've been, which is typical of the region actually. The copper recoveries, the copper mineralogy is extremely easy to beneficiate in typical float plant environments. The gold it gets picked up in an early gravity float, and some of the gold remains in the tails from the flotation plant, but those flotation tails can be recirculated until the gold is extracted. So we've got very high recoveries of copper, nearly 100%, and gold recovery without optimizing for gold recovery was 60 to 80%. So the drill hole that I spoke about a moment ago is being designed to target the high grade gold zone, which you'll see in a photograph in a minute. It was definitely successful. Now the purpose of that new drill hole is to conduct optimized process test work for the gold and bismuth as well as the copper. So that work can start shortly. So one of the key projects that's ongoing at the moment is Tennant Minerals is involved in what we call the Strategic Copper Gold Alliance. Now, Emerson Resources, COFE Limited, and Tennant have combined forces and resources to seek and have now been awarded a government grant to study a joint user process facility in the region. So we've received a substantial grant a combined grant from the federal and territory governments, and we're in the middle of tendering that work, and that will probably be reported to the market mid-year, and following on from a successful scoping study into the same multi-user facility that we carried out earlier last year, which was successful. We're very positive that this feasibility study will come out positively, and certainly metal prices, all three metal prices have firmed up significantly during that period. So for Bluebird, it's a genuine pathway to get our 1.6 million tonnes of ore to market, and potentially prepare a feasibility study on a standalone feasibility study that would contemplate mineralisation being processed in a joint user facility. So that's ongoing, and it's a boon for the alliance to receive this money, this federal funding. Now in the region, this is zoomed out a bit. This is some of the geophysical modelling that we've been doing that shows, you can see Bluebird indicated in the middle there, and there is also several other new gravity targets that we're also working on. And that's the Bluebird tenement you can see there, and with the Babler tenement, which is shown on the bottom of that diagram, you can see better in this diagram. We've recently reprocessed significant gravity and magnetic data for that area, and we've got some development targets in the south there. We recently completed geochem auger sampling over that area. Got some interesting targets that we're following up. So that's where we see work ongoing outside of the Bluebird discovery to target analogues of that discovery. So we're expecting the drilling results from the hole we discussed imminently. They'll certainly be in the market when this presentation goes to air. So we expect the PFS to be the collaborative PFS to be completed mid-year, and then whilst we'll internally be looking at upgrading our new mineral resource, possibly as discussed, looking at new gold and bismuth metallurgical test work. We'll be looking at testing the Bluebird depth down plunge extensions with the grant as discussed, and there will be further drill target modelling and work on the greater area. I'd just like to finish with the high-powered technical team that we have here in the company. John Dugdale, a strong advisor, very experienced in the region and in the style of mineralisation. Myself, a dedicated general manager, and then you can see the board of directors that support us in our organisation. So Bluebird has been it's interesting that it's a new and blind discovery for the area. It's come at a time when investment is increasing greatly in the area. The market for the minerals in the ground in Tennant Creek is increasing substantially. So there we go. It's Bluebird and Tennant Minerals is we're working hard to develop the project and increase its potential and bring it to development in the near future. Thank you all.
Good morning, it's Paul Dixon here from Axel Ree. I'm the non-executive chairman. Axel Ree is an ASX-listed company We are in the rare earths field, operating in Brazil in the Lithium Valley. This is a picture of the Lithium Valley in one of our projects called the Caladeo project, which is our main project. You can see from here that we have 176 million shares on issue, and as at the end of December, 7.1 million in the bank. So with the current share price, our market cap is around about 11 million market cap and $7 odd million in the bank. We have an experienced team which we're building out and adding expertise as we go. And currently we're looking to add a managing director based in Australia. These are our key project areas in the Caladeo project. We have a JORC resource of 572 million tonnes at 1,506 ppm TREO. As well as that, we have a gallium resource, 439 million tonnes at 38 ppm of gallium. And you can see the project area is 420 square kilometres. It's very large, and to date we've only drilled 35% of that. This is a picture of an operating rare earth mine in China, and this is the style of mining that it is. It's called in situ recovery. This is the standard. China has been operating like this for since 2010, and 70% of the world's ionic clay rare earth production is via this style of mining. And they use Epsom salts or magnesium sulfate as the lixiviant, which actually helps extract the rare earths. This is a schematic of how it works. These hilltops that I showed you in the first slide are perfect for the style of mining that we want to do. You inject the lixiviant into the top of the hills, it filters down through, gathers the rare earths, and then there are extraction wells and pipes down the bottom, which extract and put it into the tanks. We have a hard rock granite at the bottom, which acts like a plate, and it actually stops the rare earths from dissipating any further. It's low capital intensity, environmental footprint. You could see that from some of the earlier slides. It's very, very minimal, and it's a much quicker pathway to production than open pit mining or heap leach. Has it been proven at scale? Absolutely. In China and Southeast Asia, they've been mining this way since the 1990s. It also helps with permitting. It should be low permitting, and it should be simplified where we are in Brazil for our Caladeo project. This is just two of our project areas, the Woolwich deposit and the Paraíso deposit. We have the potential for 12 well fields in the Woolwich deposit and up to 9 in the Paraíso deposit. This is a key slide. It shows that the current resource that we have just in one of our deposits, called the Woolwich deposit, is 128 million tonnes. And you can see the soluble TREOs that we're getting out, 464 ppm, is very comparable to an already existing operating mine in Malaysia owned by the Southern Alliance Mining Group. That's called the Gerrick mine. It has 120 million tonnes, and it produces at 486 ppm TREO in its resource. And it's important to note that this mine has been operating profitably, and it's been making a net profit after tax of $10.6 million in financial year 2024. And recently, a Singapore-listed company acquired 40% of that company for $82 million. Now, that valued the Gerrick mine at $205 million. And it's ISR mining, which is the same style that we're going to be using. So it's important to note that our deposit, the Woolwich deposit, is similar in tonnage, grade profile. It's comparable ionic clays in geology and metallurgy, and we've got very similar results of total rare earth oxide and also the magnetics. This is the first well field that we'll be looking to bring into trial mining, and we're well on that pathway. It's an exciting stage that we're at. We've got column leach tests being completed by the Core Resources Laboratory in Queensland, and those results we're expecting in 2 to 3 weeks, and to date that has been progressing extremely well. So when we get those results, they will help us with the injection rate of our lixiviant, our dosing, our permeability and flow rates for our trial mining. You can see on this slide here, the small red square. Well, this is that small red square enlarged, and they'll be the drill holes that we'll be drilling. So we're planning to do infill drilling, 10-metre spacings in this 100-metre area where we're going to be commencing our trial, and that'll validate the ore body. And then we'll be doing some diamond drilling in here to understand the stratigraphy, and then also the wellfield design and planning. So you then move into developing the test site with tanks and pumps and pipes and the like. Up in this left-hand corner is the larger size area of the Woolwich deposit, and we'll be commencing very shortly 61-hole auger drill program to bring that into an indicated status. So we'll move it from inferred to indicated and really drive this project further as we go into the field trial. And it's important to note also that whilst we'll be doing the trial, we'll be getting all the results which will go into our feasibility study. You get actual results of actual extraction, the amount of chemicals, the types of chemicals that you put in, the magnesium sulfate, and they all go into that feasibility study. Similarly, we'll be doing our mining lease approvals where we should be starting. They normally take 9 to 18 months is a typical timeline, and also environmental studies as well. Now, with that, we're looking to scale up the people that we have in Brazil, and we're looking at adding, we've already identified an environmental expert and a hydrogeologist that will help us with the field trials, and a chemical engineer. So we're looking to scale those people up as we go, so we get into our field recovery trial. And it would normally take around about a 12-month period from now through to completing the trial and generating all those results. So that's where Axel Ree is at the moment. We're well funded for this project, and we're looking forward to moving into this trial mining phase as we go now.
I'm Chris Reed, Managing Director of Neometals, and today I'm going to tell you how we're going to transition to become a gold producer. So at Neometals, developing gold and lithium operations is in our DNA. So we first developed the Comet Vale gold mine and mined that underground for a number of years until 2009. That's now owned by Gorilla Gold. We then developed the Bluebird mine and mill at Meekatharra, refurbished that. We sold that. That's now Westgold. We developed the Mount Marion lithium project with Mineral Resources and Ganfeng in a number of years. We then moved into battery recycling with SMS Group and built a plant for Mercedes-Benz. And now we're headed back into gold to build cash flow. Corporate overview of Neometals. Historically, we've returned over 82 million back to shareholders via dividends, buybacks, and returns of capital. Where we see ourselves today is rebuilding the business. We need to get back to our former $1 billion market cap, and I'm pleased to say we have the assets to do that. We currently have an entitlements issue and a second phase of an institutional placement to settle end of May, early June, and that'll give us the firepower to get there. So how we're going to do it is getting back into cash flow, which is the cornerstone of any business. And so for us, Barrambie is going to be the source of that cash flow. It truly is a camp scale opportunity in a prolific gold fields in the Murchison, which I'll tell you about. We've developed a resource in the last 12 months that's enabled us to get mining contractors to come into a 50-50 production joint venture. We'll basically dig it up, or they will dig it up, truck it and toll treat it, so we don't have to build a plan or wait for any of those sorts of approvals. That allows our geos to focus on building the resource inventory and the mine life. We think gold's a fantastic base to build the business. You know, we're not sure when the global geopolitical uncertainty is going to end, but as soon as it does, there'll then be a big focus on the inflation. We retain interest in critical minerals for both. I mean, we have assets in lithium and vanadium. One is a brownfields exploration in lithium. The other one is a vanadium project that's currently in the project financing stage. Those two commodities are still the most positively impacted commodities as forecast by the World Bank out at 2050, so very investable. But we'll focus on our 100% owned gold at Barrambie, and now I'll just play you an animated video.
Neometals' 100% owned Barrambie Gold Project is located between the Western Australia mining towns of Meekatharra and Sandstone. This prime location within the prolific Murchison Domain is a hub of active gold exploration, surrounded by numerous operating gold mines and processing plants. Having held the project since 2003 with a focus on its globally significant vanadium titanium resource, Neometals has now recommenced active gold exploration for the first time in 20 years. Situated on a major crustal feature considered vital to the formation of the multi-million-ounce gold deposits of Sandstone and Yuan Mi to the south and Andy Well to the north, Neometals' granted and pending exploration tenure spans 357 square kilometres and covers 40 strike kilometres of the Barrambie Greenstone Belt. Flanking one of the world's highest grade titanium deposits are several historic high-grade gold mines dating back to the early 20th century. Notably, the Barrambie and Mystery mines produced at grades approaching 1 ounce of gold per tonne, with operations extending to depths of nearly 100 metres below surface. Based on historical drilling from the 1980s and 1990s, in 2024 the company announced an exploration target ranging between 335 and 775,000 ounces of gold, which underscores the project's significant potential to host multiple gold occurrences. During 2025, the company completed successful RC drilling programs at several targets, including at the Barrambie Ranges Trend, Mystery Area and at the Ironclad deposit, which is currently being prioritised by the company for early development and near-term cash flow. Recent drilling at the Barrambie Ranges Trend, situated to the east of the large titanium vanadium deposit, returned excellent results in the area of the high-grade workings as well as along strike. This footage shows an approximately 1 kilometre segment of the Barrambie Trend, where the recent drilling returned results up to 5 metres at 5.6 grams per tonne gold, including 2 metres at 13.27 grams per tonne gold. Historic workings have been mapped along 4 kilometres of strike, demonstrating the scale of the target. The historic Barrambie Ranges gold mine produced over 15,000 ounces at 29 grams of gold per tonne between 1905 and 1911. This long section portrays a snapshot of the underground workings as they were in 1908. Also portrayed are the north-plunging high-grade chutes recognised by the miners, which would have produced at many ounces to the tonne. Recent drilling demonstrated significant exploration potential, returning several significant results below these historic workings, such as 2 metres at 19.41 grams per tonne gold, including 1 metre at 38.4 grams per tonne gold, 2 metres at 11.75 grams per tonne gold, and 2 metres at 7.39 grams per tonne gold. This 1.6 kilometre segment of the 4 kilometre Barrambie Trend highlights the exploration opportunity, especially given the initial exciting results from our first exploration program, testing below the sparse, shallow historic drilling. Opportunities beyond the Barrambi Ranges include the Silver Lining and Kismet prospects, and the Ironclad and Mystery targets in the Sugarstone area, approximately 8 kilometres to the north of the Barrambi Ranges. Significant data sets were available from historic drilling, which was used to guide initial drilling. And in June 2025, Neometals announced an opening mineral resource estimate of 13,000 inferred ounces at Ironclad. However, recent infill drilling has increased the confidence in this estimate, and step-out drilling is helping to identify significant opportunity for further resource growth, such as 19 metres at 4.16 grams per tonne gold, including 9 metres at 7.19 grams per tonne gold, located down plunge of the near-surface mineralisation. The Ironclad MRE was updated in March 2026 and now stands at 285,000 tonnes at 1.6 grams per tonne for 15,000 ounces of gold. Significantly, 86% of ounces are classified in the higher confidence indicated category. Based on this updated MRE, the Ironclad scoping study outcomes include the potential production of between 10,000 and 11,000 ounces of gold via open pit mining and toll processing, and generating cash flows between $19 million to $23 million. The broader Ironclad Mystery Corridor has significant exploration opportunities, and initial drilling is providing similar success to that achieved at the Barrambi Ranges trend, with exciting results such as 14 metres at 11.74 grams per tonne gold, including 6 metres at 26.56 grams per tonne gold, being returned from initial testing below the shallow historic workings. The Ironclad Gold project is well advanced, with next steps along the development pathway to include execution of key agreements, completion of remaining technical investigations, and submission of outstanding approvals documents. Gold occurrences are documented across the length and breadth of the Barrambi project, hosted in various lithologies and of multiple styles. This presents a wide array of targets in both established trends and greenfield settings. With such diversity comes opportunity, the potential for Neometals to build the Murchison's next camp-scale gold project.
And so, yes, we are going to build the Murchison's next camp-scale project, but to start off with, we want to get into production. So at Ironclad, we drilled our first holes there in February 2025. In April, we've been able to announce the production joint venture to develop Ironclad. So this is what the Ironclad mine looks like from a side-on view. So there's the initial pit. We have quite a lot of material outside of the pit shell and inferred. We need to infill drill that to raise it. Certainly the grade and the alteration seems to be increasing as we head down plunge, which is fantastic. And look, you know, it's only very, very shallow. So just think of that as more of a starter pit. The scoping study metrics that we could make up to $23 million with pretty conservative assumptions. We hope to outdo that by one, making the resource bigger and to increasing some of our recoveries. So I think, you know, if the best endorsement that you can have is to have experienced mining contractors come in and to do that on a essentially fund all the working capital requirements, fund the transport, toll treatment, then recover their costs and split the profits 50-50. I mean, from our model, that would mean that they'd have to invest about $30 million before they started recouping costs, which we think is a fantastic endorsement of the potential. So we've done a joint venture over that mining lease application. BML Ventures, very experienced contractors. We'll get to making an FID in the second half of this year and hope to mobilise early 2027, subject to that FID. The next asset that I'll go to is lithium. So our Utah brine project, it's actually a lithium and potassium brine deposit. It's an oil field deposit as opposed to your conventional salt lake or hard rock mine. So what we've done is we've been able to do a deal with some friends that own the Lisbon Valley Natural Gas Plant and all the oil and gas wells. What we've done is we've acquired 51% equity in the Utah Brine Corporation that holds about 84,000 acres of tenement applications for potash and lithium. in Utah over their oil and gas fields. In a lot of the old wells, there are lots of brines. There's like an underground sea. So we've signed an access agreement with their holding company that owns the oil and gas leases to access 23 inactive wells, all the data associated infrastructure, and to pay them a small annual fee and a production royalty. It gives us exclusive access to existing wells and infrastructure, which will help speed up our exploration and evaluation of the potash and lithium. So, you know, what we see is they're pulling gas from down deep at the top of the Leadville and further down in the McCracken units. And then about halfway down, there's this massive underground sea. Now, the Paradox Basin is about 600 kilometres long by about 200 kilometres wide. We're in a part of that section. We've got a very good holding in there. We know that it is, there are intersections of potentially economic lithium and potassium. And so we are going to work on that. We've just put out an exploration target, which shows that there's an awful lot of muriate of potash, and potash is one of America's most critical materials. They import 96% of it. It's fertilizer. I mean, they're short in the US, they're short in Australia, and also a significant amount of potential lithium. That's based on the historic well access, the well data across the 84,000 acres of tenure. So, you know, the strategic rationale behind that, you know, it's a low-cost entry back into the lithium world for us, having developed Mount Marion in 2015 with our partners. You know, we've been out of lithium through in terms of the upstream mining, but we've been commercializing our Eli process technology in an agreement with Rio Tinto that basically takes concentrated lithium chloride or brine through to lithium chemicals. So, you know, we do have deep processing expertise in lithium. These brines have previously had DLE that's worked. I think what we really like about Utah, it's a red state. It's very pro-business. In 2023, it was the Fraser Institute's #1 ranked mining jurisdiction globally. We have high voltage open access power lines running over the project. Very, very attractive prices from 2.7 to 6 US cents a kilowatt hour, which is a fraction of what you pay in Australia or in most places around the world. And we have access to natural gas from our partners through the Lisbon natural gas plant. You know, that's about $1.50 a gigajoule. So once again, very, very cheap. And, you know, the two commodities of potash and lithium really align with the US critical minerals strategy. You know, we're potentially eligible for accelerated federal permitting. We've made, or UBC has made an application for DOE funding. There are a number of productions. We're going to target the US Department of Agriculture fertilizer production program as well. So, you know, we think it's got all the ingredients to make a very, very competitive business. In terms of the forward-looking news flow, we announced the deal in March. We put out an exploration target in the last 2 weeks. The next steps are to take a bulk sample out of one of the wells that accesses those brines. We'll then truck that down to a direct lithium extraction provider. We'll run a pilot. We'll then put out the results, sample additional old wells so that we can define a mineral resource estimate under JORC, then use that as a basis to put out a scoping study. So I think Neometals, you know, we provide fantastic exposure to gold and critical metals, you know, giving the shareholders multiple shots on goal. You know, gold, lithium, vanadium, we just think they're very investable commodities in the long run. Gold's the focus to generate cash flow. With that, we can then look at developing the lithium business a little quicker, but not until then. You know, business model diversification from, you know, having 100% near-term cash flow from our Barrambie project via a low-risk joint venture, upside in some of the other projects through royalties and joint ventures. we've got experienced leadership and leading partnerships to get it done in the most capital efficient way. So Utah is a strategic entry into a known lithium and potash basin in the USA. Utah is a stable and supportive jurisdiction for mining investment, ranked #1 in the world in 2023. It leverages that existing wells and infrastructure, accelerating and the exploration and lowering the costs of advancing the project. Historically, direct lithium extraction has recovered lithium at very high values from brines in the area. We have deep lithium brine processing expertise through our 70% owned Eli process, which has got the potential to deliver very low costs from purifying and electrolysis of the lithium chloride that we recover from the DLE process. We're fortunate in that we've got fantastic infrastructure. Even though it looks like it's out in the middle of the desert, it's only 50 kilometers from the nearest town. Most importantly, we've got 2 open access high voltage power lines that run over the project. Attractive power tariffs of 2.7 to 6 US cents a kilowatt hour from Rocky Mountains Power. And we're able to access gas from the Lisbon natural gas plant. The current price is about $1.50 a gigajoule, which is, you could barely transport gas in Australia for that price. And potassium and lithium align with the US critical minerals strategy. We're able to access federal permitting coordinated. We can access federal funding programs. Utah Brine has applied for a Department of Energy grant already, and will make subsequent grants, and will be eligible for support. The US presently imports 96% of their potash requirements, so there is a big drive in the administration to be self-sufficient in potash or potassium, and lithium is obviously on the critical minerals too. So in terms of indicative milestones and news flow, we've got a busy agenda over the next year. We put out the exploration target in the last 2 weeks. We'll then take a bulk sample of the brines. We'll take that down for a DLE pilot. We'll then put out the results. We'll then look at sampling other historic wells to build a mineral resource estimate, and that'll allow us to finalise a scoping study, which is a pretty good achievement for all in the first 12 months. So in summary, I think Neometals, we provide excellent exposure to gold and lithium. It really gives the shareholders multiple shots on gold. The commodity diversification, building cash flow from gold, that's a great foundation for our business. And then we can look to invest in the lithium business and accelerate that a bit later on. Gold is the focus. We do have business model diversification in terms of a platform for ESG aligned growth. We're mining, but we're not building processing plants or tailings or big waste dumps. Our technologies for processing lithium and vanadium are recognized to have very, very low carbon footprint and to be low cost. And we've got experienced leadership and partners to develop our business. So thank you very much for your attention, and I wish you well.
Welcome to the Nickel Industries March quarter quarterly activities presentation. Pleased to report safety and sustainability. Company-wide 12-month lost time injury frequency ratio of 0. No lost time injuries against 4.8 million safe man hours worked for the quarter, and almost 18 million safe man hours worked year to date. Company-wide 12-month rolling TRIFR at the end of March was 0.45. We were saddened to report that there was unfortunately a fatality which involved a contractor working within our Hengjaya mine area, who was working on construction of high voltage transmission lines. Following an investigation, all work has recommenced except for work on that transmission area, and we expect work in that area to recommence shortly. The Hengjaya mine is one of only a handful of mines in Indonesia that has been awarded a biodiversity area. That's 197 hectares, and that area will be used to provide education, but more importantly, the protection, preservation and study of endemic flora and fauna, and the facilities located within that biodiversity area are about 50% complete. And then finally, our university scholarship program, which has been very successful, continues to grow, and we're looking to have 30 scholarships in full-time university studies by the end of this year. In terms of the quarter itself, a very strong quarter, 135 million, or almost 137 million of adjusted EBITDA from operations. That's our strongest quarter since December 2023, where we recorded 135.4 million of unadjusted EBITDA. I will just go into a summary now of our operations. Our RKEF operations, we can see that the sale prices increased significantly, up 19% from 11,100 to 13,201. Pleasingly, our costs were only up around 4%. So we've seen a 155% increase in EBITDA per tonne from our RKEF operations. So that's gone up from 1,114 in the December quarter to 2,842 in the March quarter. And given that we produce around 125,000 tonnes of nickel in NPI from our RKEF operations, if you apply that sort of almost a $3,000 a tonne margin, you can see we should be able to deliver very strong EBITDA from our existing RKEF operations over the course of 2026, assuming pricing stays where it is. In terms of our HPAL operations, our 10% interest in HNC, we also saw an increase in EBITDA and EBITDA per tonne there. EBITDA per tonne was up 20%. We have seen a increase in the cash costs as well. That's been predominantly driven by an increase in sulfur prices, which is due to the ongoing war in the Middle East. And we've seen an increase in the sulfur prices from around $460 a tonne in the December quarter to about $570 a tonne in the March quarter. ENC, delivery of our new fully integrated HPAL plant. Commissioning is going very well. We're commissioning some of the key standalone equipment at the moment, which is power, water, acid, CCD, circuit thickeners, precipitation tanks. We are targeting the integrated commissioning in May of this year, and we're targeting to achieve full ramp up by end of October this year. So a very quick ramp up profile and targeting 100% of nameplate capacity, which is 72,000 tonnes by the end of this year. In terms of sulfur, which is a big cost driver, we have enough sulfur in stock until end of September of this year. And that sulfur was acquired at an average price of about $450 a tonne, which is significantly below the current market price, which is around sort of $900 to $1,000 a tonne. And during the quarter, we were very pleased to announce the completion of the acquisition by Sphere of 10% in the ENC project. That 10% was acquired at a 2.4 billion valuation. Sphere is one of only 3 accredited suppliers to SpaceX, and they're the only one with a long-term contract, 10 years. And nickel cathode from ENC will be going into super alloys, which will be used by the SpaceX rocket fleet. In terms of our mining operations, very good quarter. Over 3 million tonnes of ore was sold. And we also announced at the beginning of the year that we secured 14.3 million tonnes of RKAB quota. That is a 60% increase, almost 60% increase on the 9 million tonnes last year. That comes where a number of our peers were getting significant cuts. So that's a big positive for the company. And the significant increase in EBITDA was at the end of last quarter. We exhausted our 9 million tonnes, and so we were unable to mine for a majority of the December quarter. And so that's where the significant increase in EBITDA is. But the mining operations are performing very well. The Indonesian government just recently introduced a new benchmark mineral ore price. Effectively, what it means, there won't be any change in saprolite pricing versus what the current market price is. Potentially, there could be an increase in the limonite price, but at this point in time, all of the HPAL smelters in Indonesia are not adopting that new pricing regime. In terms of additional projects, Sampala project, good progress continues to be made. You can see a section of the haul road there. That's 8 kilometres of the 24 kilometres that's required to link this project up to our existing processing operations. 8 kilometres of that 24 is essentially finished. The remaining 16 kilometres, we're just awaiting some approvals, and then we'll be looking to deliver that. Once that's done, we'll be able to bring that project into production, targeting sort of first half of next year. And given the very strong margins from mining operations and the change in pricing, it comes at a very good time. And on the Siduarsi project, another project that we have, we're currently well advanced in approval of a feasibility study to sell 2 million tonnes of ore per annum. So given the current very strong nickel ore pricing, we're obviously focused on delivering and fast tracking the development of these projects. That concludes the presentation. So in summary, very strong quarter. Looking forward to a strong second quarter to the year. Obviously, there's some strong momentum in the LME nickel price, and we've seen a significant increase from $14,892 a tonne in the December quarter to $17,338 a tonne for the March quarter. Current spot is over $19,000 a tonne, so we're extremely well positioned to capitalise on the increasing nickel price. And we remain very focused on delivery of the ENC HPAL, achieving the commissioning and ramp up, and development of our additional ore mining projects. So thank you for your time.
Hello everyone, my name is James Wilson. I'm the CEO of Alchemy Resources. Thanks for the opportunity to present at the ASX Gems Conference today. Just hope to run you through Alchemy's projects and where we're headed. Disclaimer there. Alchemy is a pretty cheap company at the moment. We've got a market cap of roughly sort of $12 million, cash of $1 million in the bank, and we also have investments just recently from a deal we completed last week where we sold tenements to Forrestania Resources for 7.7 million shares in Forrestania, and that's worth sort of $4 to $5 million as well. So good equity investment there. Good major shareholders, Northern Star there at 6.6%, and the top 20 shareholders representing sort of roughly sort of 40 to 50% of issued capital, which is it's a good tight stock. Good experienced board and management. I myself a geologist of 20 years. My chairman also a geologist of 40 years experience, and a good basis of corporate and accounting background in the company as well. Just looking at the portfolio, we're a diversified but advanced explorer. Gold obviously provides a solid base of 342,000 ounces of gold equivalent and strong JV exposure in the proven belt in New South Wales. Copper is really the growth engine for us. High-grade New South Wales targets that are drill ready. It's Yellow Mountain and Overflow, with additional upside from nickel, cobalt and alumina there. Lithium also gives us a fully funded exposure through our partnership with JOGMEC, the Japanese government agency, and that comes with no capital burden either. Iron ore in the Meekatharra region offers near-term development potential for us, and also high-grade material on a granted mining lease. It's a great asset to have, and we now have a strong partner as of last week with NewCam. So it's diversified, but importantly, each pillar has a clear and clear role in driving value for the company going forwards. We've built a diversified Australian project portfolio, but a clear focus emerging in New South Wales. The Lachlan is our key growth hub. That's anchored by the Yellow Mountain Copper Gold Project and the 342,000 ounce Overflow gold resource just to the north of it. That's supported by our additional nickel, cobalt, Upper West Lynn and HPA potential there. In Western Australia, the Briar up near Meekatharra, that provides exposure to both gold and high-grade iron ore through our strong JV partnerships, now including UCAM Minerals, and that was recently announced in the last week, while Coroni provides the lithium exposure through our partnership with JobMed. Importantly, following the recent transactions, we're simplifying the portfolio. That was with the Forrestania deal last week, and we're retaining upside where it matters, which is while focusing capital and effort into high-impact copper-gold exploration in New South Wales, where we can see the greatest value upside, and hope to guide you through that in this presentation. Just going to New South Wales, this is really where the story is heading for us near term. It's our Lock and Fold Belt position in New South Wales. It's a highly endowed corridor alongside the major deposits such as CSA, which is now owned by Harmony, Hera and Peak, which gives strong geological context for what we're seeing. And at Yellow Mountain, which is just sort of 60 kilometres north of Condobolin and about 200 kilometres south of Cobar in New South Wales, we've intersected significant copper-gold mineralisation. And most recently on our drill campaign late last year, we got 113 metres at 1.2% copper equivalent. It's polymetallic. It's copper, gold, lead, zinc, silver. At Overflow, which just sits next door to this project, we have a 342,000 ounce gold equivalent resource, providing a solid base as well. So it's a really, really great area. We're just north of Mineral Hill, which is owned by Kingston Resources, and just to the east of Aurelia's Hera and Federation deposits. It's a really important area. Importantly, both of these deposits, the Overflow and Yellow Mountain areas, sit along the same structural trend. Our recent geophysical IP work is highlighting a much larger mineralisation system there with multiple untested targets. In most cases, a lot of these targets haven't been tested for probably 3 to 4 decades. So it's quite exciting. But it's not just about what we've found, it's about the scale of what's emerging. And that's where we're about moving to test with our upcoming drill programs. Just looking at Yellow Mountain itself, you can see it's a planned view of our recent drilling. It's quite busy there. Our RC drilling late last year, as I mentioned, outlined thick, consistent mineralised intercepts starting from shallow depths. That includes that intercept I spoke about, 113 metres at 1.17% copper equivalent in YMRC 004. It's just on the south, the bottom left of the picture there, with multiple high-grade zones within that. What stands out is there's another hole to the north of it, is it's YMRC 005 to the north. That came back with 31 metres at 1.54 copper equivalent. So it's from near surface as well. I've gone with stronger high-grade intervals inside of that. What stands out for us is the combination of scale and grade. It's long intercepts, meaningful base and precious metals credits, and prior to our drilling last year, as I said, this hadn't been drilled since the 1980s. So it's a real untouched gem. And when you overlay that with the IP anomaly, that's induced polarization anomaly you can see there to the east, it suggests that we're only testing the edge of this system, and we're going to give it a red-hot go to actually go and discover more at depth and along strike. So the next phase is about stepping into that anomaly and seeing how big this system can get. So this is a cross-section of Yellow Mountain from our drilling last year. As you can see, what we drilled to date is only testing a relatively shallow portion of the system. You can see in green our drill hole there. It was really trying to validate what the older timers did. When you lay that into the structural interpretation, it points to a coherent mineralised system that continues down plunge and at depth, and this hasn't been tested historically. So the upside here isn't extending what we've found already along strike, it's about stepping into depth where the system is completely open, and that's where the IP targets come in the next slide. So IP geophysics was completed in January 2026. IP is particularly good at picking up chargeable minerals like pyrite, chalcopyrite, and other sulfides. So, you can drill this and get copper sulfides and chalcopyrite. You can drill this and also get sulfides in pyrite. So, there's upsides and downsides to this kind of testing. But the targets are very large and they've never been adequately tested. The important thing to remember here is that the IP target actually did outline the area where we've already had big intercepts of the 113 metre intercept in YMRC 004 and a big blob there. There's another blob to the north of that called Target 1, and that hasn't really ever been drilled. And Target 2 has one drill hole onto the very eastern side that didn't actually test the target itself from 50 years ago. So it's a very exciting set of targets. We're doing heritage surveys this month, and we're intending to test it this year. Just going north now to the project next door to Yellow Mountain, which is called Overflow. We have a 342,000 ounce maiden resource at Overflow. So this is an early stage. It's a defined system with scale. Historically, there have been some high-grade drill intercepts, and more recently, our surface work has continued to return strong gold results reinforcing the mineralized footprint. So we've got 14-gram intercepts, 14.95 there up to the north. Got rock chips in the system itself of 23 grams gold. It's high grade. What's particularly compelling is that the system clearly extends beyond the current resource. In the north, there's those mullet samples I just mentioned, never been followed up. Similar results in the south. So while it provides a solid base, the real opportunity here is growth, extending and upgrading the resource along a well-defined structure, and we're going to give that a go in the current quarter. It's a nice balance alongside Yellow Mountain, one with a defined resource and the other one with emerging discovery and scale. Just there's a long section of the same thing. You can see some of the high grades in there, 10 metres at 4.4, 4.65 metres at 8.5, and that's just the gold. It doesn't include the high silver, the high lead, and the high zinc content. So it's an exciting system. Just moving to the Bryah now. This is from Western Australia. We have two operations there. We have the Newcam joint venture that we just recently transacted on with iron ore, and the Cashless Metals JV, which we own a 20% free carried interest on. We partner with Newcam there and Catalyst, and they're free carrying us. We don't have to spend any money on those going forwards. And it's a strategic land holding. It's an M&A hotspot as well, with recent deals with Great Boulder just buying the Peak Hill asset, which just sits over here to the west, for about $58 million just last week. Just moving into the assets themselves, you can see in the green here is the Alchemy 100% owned ground. We've just joint ventured this, so I'll just need to update this map. And this is actually joint ventured to Newcam Minerals. The blue area is where we're free carried with Catalyst Metals, and again, free carried on those assets with an existing deposit there at Wilgina in the middle. So it's a very exciting part of the world. Just moving into the Newcam transaction on the iron ore. Newcam's a private company. They currently mine at Mount Gould up the road. They've taken a 60% interest in Valley Bore. They paid us $500,000 for a 6-month exclusivity and a further $500,000 to exercise the option, which they did last week. As such, they acquire a 60% interest in the project, and they'll fund and manage the project to a decision to mine. So we're free carried on that, and we'll retain 40% to the point where we actually start mining, which is great. Valley Bore sits on a granted mining lease. It's 8 kilometres from the road. You can see the main highway there that goes to Port Hedland and Geraldton. And importantly, we've tied up with a miner in Newcam, is that they currently mine iron ore and they have all the infrastructure solutions at play. Just sort of looking at the asset there itself, in the middle there with Valley Bore, it's a very high grade deposit. You can see some fantastic intercepts there, 40 metres at 62% iron, 50 metres at 62.5. Make no mistake, this is high grade. And there's definitely more to find here with rock chip samples up to 2 kilometres away, recording similar high-grade results. Just moving to our joint venture with JOGMEC, just looking at some of the anomalous areas. This is east of Kalgoorlie. Again, a free carried interest with JOGMEC earning 51% by spending $6 million over 5 years. Soil sampling has identified multiple anomalous zones for lithium follow-up along the strike of the Manna deposit. So we're in a good spot. And yeah, the farming's fully funded by JOGMEC, and it's a very strategic part of the world to be working in, and it's excellent to have someone else paying those bills. So just looking at the indicative exploration timeline, obviously the lithium targets will be air core drilling in the current quarter, with assays and planning a follow-up after that. The the Catalyst Metals joint venture was just ongoing throughout the year with multiple programs there, and the iron ore project. Now that we've actually sold that 60% interest, Newcam will take over management of that, and we'll complete that JV, and RC drilling is planned. And I think we have programs of work already approved for 70-hole drill out of Valley Bore that will hopefully take place sometime this quarter. At Yellow Mountain, we have heritage survey as well as the heritage surveys overflow. The planning is in place for that to start mid-May, and then we'll hopefully get to RC drilling shortly after that and plan for follow-up. We'll be drilling those big IP targets there. So stepping back, this is really what Alchemy Investments case comes down to. We've built a strong strategic position across highly prospective belts. We've got funding in place through recent transactions and partnerships. Our team has got a proven track record of both exploration and deal making. We've done the JOGMEC deal, we've done the Newcam deal, we've done the Forestania deal in the last 12 months or so, which is great. It's critical in executing this strategy. And near term, we're focused on copper, gold, and iron ore, assets that have the potential to genuinely move the needle for the company. Particularly with the iron ore, granted mining lease has rapid potential to actually move to a development scenario if we pull the right levers. So when you combine that with where we're currently trading, we think there's strong leverage to exploration success as we move into a very active period for the company. So thanks for your time today. It's been really good to present, and please get in touch if you want to have a chat. Cheers.
Thank you for joining me today to discuss EQ Resources Limited, a leading producer of tungsten and a critical supplier of tungsten as a critical and strategic mineral to global demand. Brief disclaimer, as per any normal presentation. So EQ Resources, corporate structure, we are listed on the ASX. We've got currently a market cap in the order of around 1.7 billion Australian, 4.88 shares on issue. Oaktree currently holds around 15%. It's recently increased to 17% with the recent conversion of debt to equity. Board management around 4%. Chronomet around 5.5%. From an annual production perspective, through until June 2025, we produced 1,678 tonnes of WO3. It's worth noting, though, that the company previously was under significant challenges from a solvency perspective, from a liquidity perspective, and corporate governance. And through the end of 2025, we've resolved those elements of the business such that now we are on track to increase our production through both the two assets that we have, one in Spain, Barruecopardo, and the one in Australia, Mount Carbine, to increase our production through into 2,500, then through into 3,000 to 3,500 tonnes per annum of WO3 contained in concentrate. We're covered by a number of brokers. The brokers who are covering our stock are increasing as we further de-risk our stock and move up the curve in terms of both production, cash flow generation, and obviously market capitalisation. So why tungsten? Why now? Fundamentally, tungsten is all about the supply shortage. Tungsten itself is a niche product. It goes into a variety of different downstream products. Global demand is around 150,000 tonnes. Of that, 50% is consumed in the rest of the world, and the other 50% is consumed within China. It's critical to a variety of different downstream applications. So 26% goes into mining, construction activities. Think there of activities like the tunnels, big borers, all ground engaging gear for construction, be that civil, be that mining construction or major projects, hydro projects, anything that is mining or construction related utilises and consumes tungsten. About 14% goes into industrial and medical applications. 25% goes into transport. In terms of transport there, it goes into high-speed manufacturing. So, for example, the manufacturing of moving parts, ICE engines for vehicles, but even EVs still consume a significant volume of tungsten in terms of the moving parts that are required for an EV. Hybrids consume significantly more than both ICE engine vehicles and EVs, but it also then goes into manufacture of braking systems for planes, the balance weights on rotors, the balance weights on the wings on aircraft, a variety of different applications. Equally, 11% currently goes into defence. Defence consumption is up around 28%, obviously because of global geopolitical situations and countries increasing their spend on defence. What's equally to note around defence spending is the fact that the tungsten that goes into defence goes into both end-use applications and in the manufacturing process. But end-use applications is not something that then comes back into from a recycle perspective. And so while in a lot of different applications there is a component of recycle, there's certain end-use applications that don't enable recycling. Equally, tungsten's going into a lot more sunrise industries as well. I think there are things like the wire that's used to cut down silicon blocks into silicon wafers that go into solar panels. Historically, that was a diamond wire. Today, it's a tungsten wire. The reason for that is the production of less swarf and greater yield from a silicon block into a solar panel. Equally, it is utilised in the manufacture of chips And as we use, as AI continues to grow, the large language modules, or the chips that support the large language modules, they have more layers in the chips. So WF6, tungsten hexafluoride, gets consumed in that process. So the more layers, the intensity of tungsten use is increasing as we move to more large language chip manufacture for AI. From a supply side perspective, tungsten, we talked about demand, 50% in China, 50% in the rest of the world. On the supply side, 85% of tungsten is produced in China. And then with additional tungsten coming out of Russia, North Korea, Myanmar, and more recently Kazakhstan. Kazakhstan mine, the tungsten here is a byproduct, but is 100% owned by Chinese state-owned enterprises. So unrestricted countries contribute only 13% of global supply. And what that means is that there's a deepening structural deficit in tungsten supply. And when you look at that, the 75,000 tonnes that's consumed in the rest of the world, about 40% of that is supplied by recycle. So that takes 35, or counts for 35% of that. You're left with 40,000 tonnes that's needed, that needs to be supplied from primary. And at that 13%, that puts you to around 10 to 15,000 tonnes. Currently, that 10 to 15,000 tonnes is also being competed with from a Chinese perspective. The Chinese have been importing across 2024 and 2025 record volumes of tungsten concentrate out of the rest of the world, predominantly buying material out of Bolivia and Africa. And so that's meant that there's around 9 to 10,000 tonnes of primary that's currently available in the rest of the world that is feeding into that rest of the world demand. And that means that there's a global shortage in the rest of the world of around 30,000 tonnes of tungsten. As a result of that, tungsten prices have increased significantly, and as of the last 2 weeks have been around $3,000 per MTU. It's worth noting that in 2024, the US government implemented DFAST legislation. That legislation had the effect of banning the use of tungsten from countries of concern for use in end-use military applications in the US, but also in the manufacture of anything that is supplied into the US military. And so while it was much easier for companies to identify the volume of tungsten that goes into different military applications in the forms of penetrators, or in the form of armor shielding, or in the form of the wiring for Patriot missiles, the bigger challenge was actually to identify the amount of tungsten that's in the manufacturing process. And core to that is you look at whether that's the drawing of copper wire is through a tungsten die. The rolling of steel predominantly is through rollers that actually have a tungsten coating on them. And so when you look at the different manufacturing processes, there's also a significant amount of tungsten that's consumed in that manufacturing processes. And so what that's leading to is the bifurcation of global demand, whereby the West can only buy from the West and China can buy from China or other locations. That was also further compounded by the fact that in February 2025, the Chinese government issued legislation such that the export of tungsten from China, or from Chinese-owned enterprises, or enterprises that utilize China technology that were controlled by China, were banned from supplying tungsten intermediaries that could be used in dual-use applications. So that led to the ban of monoparatungstate, blue tungsten oxide, yellow tungsten oxide, and other tungsten intermediaries that could find their way into military applications, be that in the US or in other countries, Japan and others. And so that's what's then resulted in the significant tightening of supply into the rest of the world, and been the trigger point or catalyst for much higher prices in the rest of the world. It's worth noting, though, that equally during that time, for the first time consistently in history, the price in China was significantly higher than the price in the rest of the world. And from February 2025 through until around February, March 2026, we've seen the price in China sitting significantly higher than the rest of the world, which didn't make a lot of sense given the supply side in China. But there was also legislation passed in China in regards resources. And in particular, there was legislation passed requiring state-owned enterprises to hold in-ground reserves of 30 to 50 years equivalent of annual production. And so that's then led to the slowing down of production, the reduction in quotas, reduction in mine production, as they sought to increase their in-ground reserves to meet the requirement from the government to hold strategic reserves in-ground for 30 to 50 years relative to their annual production. And so we've only seen the rest of the world price go past the China price in the last 3 weeks. So more specifically, EQR. How's EQR positioning itself relative to what's happening globally? EQR has 2 mines currently in production. We have the Mount Carbine mine in Australia. It's about an hour outside of Port Douglas. And we have the Barruecopardo mine in Spain on the border with Portugal. And the 2 mines, the mine in Australia has 8-year mine reserve life. Only 23% of the resource has been converted to reserve. And that reserve is based on a price of $330 per MTU. We're currently undertaking drilling at the Mount Carbine site to convert further resource into reserve and extend the resources, hopefully. But at the same time, we'll provide an updated reserve and resource at the end of the year with an updated price. From Barruecopardo, Spain, the mine life there currently is 9 years. That is based on a $450 per MTU price. The asset there, equally, only 45% of the resource has been converted to reserve. The ore body is open to the north, it is open to the south, and it is open to the east and open at depth. The challenge for both operations has been lack of capital in the past, and as a result, no significant drilling has been undertaken to increase the resource and reserve life. As we can see here at Mount Carbine operations, the red there is the resource and the blue is the reserve. And so, as can be seen pictorially, there's significant opportunity to convert resource into reserve, but there's also significant opportunity to actually round out the resource where there's gaps in the drilling between current known locations of mineralisation. So we will be undertaking a 27-hole program that is currently underway to infill and to expand the resource. We also have a site to the south at Wolfram Camp. It's 60 kilometres to the south of Mount Carbine, and we'll undertake further drilling there once we've completed the drilling at Carbine. Wolfram Camp specifically has a foreign historic resource on it. That was 2.9 million tonnes at 0.279% WO3. It also has historic mining. It was mined up until 2019 when the tungsten price was variably between $165 and $250 per MTU, as compared to the current price around $3,000 per MTU. And the existing pit there, the previous owners, when they walked away, had actually drilled an ore block ready for blasting. So we know that the open cut there has additional material. We just need to do the work to convert that to a JORC compliant standard, which we intend to do through the course of this year. In addition to the Wolfram Camp and Parrot mine pits, we also have 4 other historic mineralisation or artisanal mining in the area, as well as targets that we'll be undertaking further exploration on over the next 12 months to 2 years. Over in Barruecopardo, as you can see pictorially, the pit, it is facing north to the right of screen. And so within that, we're planning to undertake a 37-hole, 12,200 metre drilling program, in particular to convert resource to reserve in the east, but also to test the northern and southern extensions of the pit. So EQ Resources, as I indicated earlier, we've been producing in the order of 1,680 tonnes per annum. We achieved record production in Barruecopardo in October of last year of 12,000 MTU for the month. That's 120 tonne. We achieved 33,000 MTU or 332 tonnes for the December quarter. Our March quarter is down on prior production due to weather events that occurred both at our Barruecopardo and our Mount Carbine operations. But we're coming out of those now and moving into higher production rates at both assets and expecting on the back of that a solid June quarter. In terms of the carbine asset, we did have last year a significant waste removal to undertake. And so through the course of 2025, we were feeding low-grade stockpile of 0.07% WO3. We continued to feed that material through until mid to late March 2026, when we'd actually uncovered the Allanth vein system. So we needed to move 1.6 million tonnes of waste from the pit, work our way through a geotechnical fault to access the higher-grade Allanth vein system. That Allanth vein system is 1.6 million tonnes at 0.264% WO3. So it's around 3 to 4 times higher grade than what we have been feeding the processing plant. We've also moved from dry processing to wet processing at the front end of the plant, which enables us to double the throughput of the processing facility. And so on the back of that, we expect between the two assets to be running at around that 3,000 to 3,500 tonnes of WO3 contained in concentrate over the next 12 months. And so on the back of that, we're able to significantly increase our supply into the market when prices are at all-time highs. And that will then lead to higher cash generation and further improvement in our balance sheet. So why EQR? Look, we're a diversified, scalable producer. We've got assets in very solid jurisdictions in Australia and Spain. We have long-term spot priced offtake. So our contracts are frame contracts. They are for certain volumes to be delivered over a period of time. But in both operations, the contracts are all related to spot price. So we receive either the average of the price for the month of shipment or the average of the price of the month prior to the month of shipment, but it is all spot related. So irrespective of contract, they are volume related over periods of time, but the price that we receive is based on the timing of shipment of material. The market remains in a structural deficit. We expect that deficit to continue for a minimum of 3 years, but most likely 5, on the back of the fact that it takes that long to bring new mines into production. So normally a new mine today would take 10 to 15 years. Even if governments fast-track mine development, you're looking at 5 to 10 years. As a result of that, as a current producer in the market with minimal other mining operations in a position to bring on additional volume in the short term, we expect to see strong prices for the next 3 to 5 years. Our resources and reserve base are expandable. We've also got 8 EPMs around exploration licenses around the Barruecopardo asset. We've got additional exploration licenses around the asset in Australia, as well as the Wolfram Camp Bamford Hill ground to the south. And as a result of that, we expect to get solid results from undertaking work in those areas where there's been no modern exploration undertaken for 20 to 30 years, depending on the location. We do have an experienced team. The team that we've assembled at EQR has excellent IP and knowledge as it pertains to sorting technology we utilise in both assets, as well as members of the team who've got experience coming out of having developed the Nui Phao mining operation, which when it was developed back in 2011 was the first new tungsten mine developed in the Western world in over 15 years, as well as then on the back of that building the first new APT refinery in Vietnam, which was also the first new refinery that had been built in the Western world in around 15 years. So excellent team, very experienced and very knowledgeable as it pertains to tungsten. Thank you for your time.
Sam Spring here, President and CEO of Kingora Copper. Kingora Copper trades on the ASX and TSXV under the ticker KCC. We're a very active copper gold explorer focused on New South Wales and Australia. As the front of this presentation illustrates, we're drilling at the moment. We've just announced that we're drilling at 2 separate projects. And our strategy is very much looking to give shareholders multiple shots on gold, multiple shots at big corporate, big copper gold discoveries. What we're underdoing is a slightly different business model. It's a portfolio. All the projects are 100% owned, offering tier 1 scale. A key element of Kingora and differentiating ourselves from a lot of the other explorers out there is the portfolio has been assembled and our exploration strategy driven by a team that's made multiple big tier 1 copper gold discoveries, the likes of Cadia and Riccio Dick. We're employing a hybrid prospect generator funding model. Rick Rule is a well-known North American investor. As Rick puts it, prospect generators have a proven track record of discovery, and in terms of creating a platform to have repeat success, mathematically they have a better success rate as explorers than the industry as a whole. And I'll walk through that through this presentation. A quick snapshot. A key element for us is having 8 active projects, all with catalysts. We've got a tight share structure, less than 48 million shares outstanding. We've done 5 partnerships to date that has unlocked potentially over 100 million of third-party asset level funding. To date, we've seen over 9 million of that go into the ground since late 2024. That's supported 18,000 metres of drilling across 7 different licenses. We're looking to do deals with our remaining flagship projects. We've got a number of brownfield opportunities sitting in minerals camps that have got already over 20 million ounces gold equivalent resource inventory and hosting world-class mines. These projects of ours have remnants and clear analogous exploration results for those neighbouring world-class assets. I should say that we've received to date $500,000 in management fee income. That's discretionary. That's important because that reduces your corporate costs and again provides a very tight structure. Treasury is strong, over $7 million in cash. That's enabling us to have an increasing capital efficient strategy, funding exploration and drilling on our 100% owned grounds, looking to add value to those projects. Only in late April did we announce the mobilisation of a rig at our Condobolin project, which we're funding on a 100% owned basis. And really importantly, there's strong shareholder alignment. Over 55% of the register is held by reporting insiders, i.e. board and senior management that are declarable shareholders, or in 12-month hold stock. And that includes the likes of Rick Rule, Jeff Phillips. And I'll touch on our register on this coming slide here. You can see here, dual listed on the ASX TSXV, about half our share count on both markets. At Rick Rule's and Jeff Phillips' request, we undertook a financing that completed in September last year that had 12-month lock-up stock. So those shareholders that participated in that financing on the venture really bought into the business model, bought into our strategy and provided that capital and the company to get on with executing this strategy. And that's only ramping up now with sole-funded exploration activities increasing. As touched on, tight number of shares, less than 48 million outstanding, which gives us a market cap of circa $40 million with over $7 million of treasury in the bank account at the moment. And again, that treasury goes a long way when you consider that we've got management fee income and the majority of our exploration expenditure is being funded by third parties at the asset level. So that's not dilution at the listed company level. Board of management, obviously very important as an explorer. John Holliday, Peter Lehman, our brains trust driving our exploration strategy on the technical committee. Both have found world-class tier 1 copper gold assets before. John's probably the foremost expert in New South Wales porphyries, being based in the region. And they're backed up by a very strong board. Cameron McRae, 28 years, Rio Tinto. from exploration through to full project development. James Durant, MD of RareX, Luke Murray, Chief Operating Officer of the Bloomfield Group, that have a couple of operating mines in New South Wales. And the names and faces that you see on this slide represent over 20% of the board. So again, strong alignment to existing shareholders. And the board's backed up by a very strong advisory board that was formed late last year after that financing that I mentioned with Rick Rule, Jeff Phillips, with a 12-month hold, really argumenting our strategy with bolstering up the team from an exploration, asset level partner and corporate strategies perspective, and also having a much stronger presence into the North American market. Brent Cook's a very well-known economic geologist. Jeff Phillips is an activist investor. Michelle and Laurie, well-known in the North American capital markets, and Kerry Stevenson, known well in Australia, but also in North America. So a very strong team all-rounded. And obviously a key element is the portfolio. As mentioned, 8 different projects. That gives us 8 times the opportunity. Again, more shots on goal. We've got a historical asset in Mongolia in the Southern Gobi, which has a JORC resource, a large copper porphyry system on one of 3 intrusive complex from surfaces. We're just going through getting a second mining license at the moment there, which will make us revisit the oxide development potential of a potentially near-term SXEW development project. But really the focus of the company with the drill bit at the moment is in New South Wales. We're currently drilling at our Northern Junee Narromine Belt project in partnership with Anglo Gold Ashanti in the northern part of the Macquarie Arc. We've just commenced drilling at our Condobolin project, which is down in the southern portion of the Cobar Super Basin. And there's a clear strategy and pipeline across all our projects, both with drilling and further deals, looking at further asset level partnerships. And that's where we think there's real upside for shareholders. Again, it's hard to have more shots on goal than what we've already got within this existing portfolio. You can see catalysts coming in the near term and medium term across all 8 separate projects. So I guess what I'd suggest for those that are interested in gaining exposure to the critical mineral space, copper obviously is a key critical mineral within that space. We're operating in a key regions in terms of important suppliers of those minerals to the global markets, and we've got projects that really, if we have exploration success, can move the needle. Backed by a strong team that have done that before and have skin in the game, equity ownership. So this web presentation is obviously a short teaser. There's a lot of details up on our website, more extensive presentation. My contact details are provided on this slide. Please do reach out. Always happy to jump on a call and walk through things in further detail. So thank you for the opportunity.
Hello everybody, my name is Shane Manair. I'm the CEO and Managing Director of Far East Golds. Most gold exploration companies never become mines. They lack scale, they lack grade, or they lack the ability to actually develop the asset. Far East Gold is not one of those companies. We already have a high-grade gold system in one of the most prolific gold belts in the world, with permits in place and strategic partners capable of building the mine. And yet, the market is still valuing us like an early stage explorer. That disconnect is the opportunity. I'll walk you through why this is a re-rating story and not an exploration story. Standard disclaimer, I'll focus on the key investment points. Eidenberg, core asset. So this is the foundation of the company, Eidenberg. 780,000 ounces at 3.1 grams per tonne, already defined. Exploration target up to 7.2 million ounces at over 6 grams per tonne, and only about 30% of the system is actually explored. We're sitting right at the point where exploration success transitions into development. World-class belts, and importantly, this sits in the same belt as Grasberg, Lihir, Porgera, Wafi, Octedi. This is a belt that produces tier 1 asset, and that matters. So there's a valuation disconnect. Despite that, we traded a discount to peers on an EV per ounce basis, and that It's only the current resource. The exploration upside is effectively free. We're de-risked. Now, this is where the story really changes. Production forest is secured, environmental approvals are secured, pathway to 100% ownership is on the table. So the biggest risk to stop that project, this project, I should say, from becoming a mine, those issues are already addressed. District scale, and now this is not a single deposit. There's 29 structural targets, multiple zones already mineralized. This is a district scale system, and that's how multi-million ounce projects are built. So I'd say we're well validated by majors. Over $25 million has been already spent here at Idenburg, previous and prior to Far East Gold. Barrick, Newmont, Newcrest, all tried, and at the time couldn't secure their permits. Far East Gold has made some big achievements and secured those permits and pathways forward. We're not guessing. We're advancing something that's already validated. Now, these are some pretty good drill results. Now, this is what drives the value, the grade and the continuity. Consistent high-grade intercepts, repeatability across zones. And without reading out all of these intercepts, these are really quite significant. Long and wide intercepts, as you can see, they're highlighted. The grades are really impressive. 8.42 grams, 8.9 grams, 13.7, 8.2, and 50 grams over 5 meters. And these are sizable intercepts. But look at the actual grade hits, 73 grams per ton, 62, 175, 180, and even up to 252 grams per ton. So this is not an isolated high grade. This is a scalable system. So we're also seeing visible gold across multiple drill holes. Now, this is a strong indicator of system strength and continuity. The scale potential at Idenburg, structurally, this system is wide open, a long strike, a long depth. It's an orogenic gold system with that strong structural continuity. So everything points towards this being a multi-million ounce outcome. We've just got to prove it. There's a development pathway in front of us, and we are moving that forward. Scoping study has just been kicked off. Resource expansion has just been completed. So we're in a very good position to move this project forward. There's a clear path from resource to development. Now, we're fortunate enough as an early stage explorer moving into this development pathway, looking for that re-rating, to have some significant strategic partners. So we're backed by groups that build mines. Xingye is 19.99%, and they came in at a 47% premium, I should say, late last year. ERG is also on the register, and they're the biggest private company you probably never heard of. So these are not passive investors. These are execution partners. Proven track record. Execution capability matters. It's as simple as that. So we have a board with deep Indonesian experience and a track record of building billion-dollar mining companies in this country, Indonesia. May or may not have heard of somebody who's been successful. He's our chairman, Justin Werner. He's also the managing director of Nickel Industries, a multi-billion-dollar ASX-listed Chinese-backed nickel producer in Indonesia. So a little bit of upside to speak about the rest of the portfolio. It's Trenggalek and beyond Idenburg. We've got that additional upside with a number of other assets. But Trenggalek is a large copper-gold porphyry system comparable to Tujuh Bukit, Merdeka's Tujuh Bukit, which is a multi-billion-dollar company itself listed on the Indonesian Stock Exchange. So this isn't even priced into the company. So we're positioned for a re-rating, we feel, across the portfolio. Eidenberg, high-grade core asset with 780,000 ounces. Wanagiri, over 1 million ounces. And Trenggalek and Woyla is that additional upside. So multiple assets, multiple value drivers. So what you have here is very simple. A high-grade gold system in a tier 1 geological belt with permits secured, a pathway through to development and partners capable of building a mine, and are still being valued like an early stage explorer. That gap closes. Thank you for your time. Thank you for your interest in Far East Gold.